Hello. My name's Ethan. Make sure you check my website, ethanwrenn.com. From there, you can find links to all my various socials. I also have a blog on there. I highly recommend reading some of the articles we've been regularly updating. It's quickly becoming one of my primary outlets. And I also have an online store that you're able to shop, buy merchandise such as shirts, hats. I highly recommend checking it out. Here's an example of what it looks like. You come to my website, there's blog at the top. You can click there, and then here's some of the articles. We recently covered VTI on the YouTube channel, so a lot of information, a lot of different things you can look at, top holdings information, and every article pretty much has a video embedded into it that you guys can also watch. So yeah, what is the first symbol we're going to be covering today? Well, we're going to be covering symbol XLRE. The XLRE is the Real Estate Select Sector SPDR Fund. So what is this? This is an ETF. This is an ETF that represents a lot of real estate companies or REITs. These are companies that have heavy holdings in whether it be commercial real estate, such as like retail brick and mortar, whether it be potentially apartments, whether it be like storage space, all these different types of companies that have a lot of value invested into real estate is what this particular ETF represents. Real estate companies are known for having excellent financials, so they can be extremely profitable, and they also pay excellent dividends. So I found a couple companies in this sector that I see a lot of value in. Later on in this stream, we're going to be covering two of my favorite underlyings of this particular ETF as well, so stay tuned. What are some of the things I personally see value with in the real estate? Well, let's first start at a technical level, right? No matter what we're covering, whether it be a stock, whether it be an ETF, whether it be an index for another country, we always cover our RSI. And as you can see, the RSI is low, nearing that 30 price point, right? And when that RSI is low, that's typically a sign that this particular product is oversold. It's or potentially a good value if you're trying to place an investment. Meanwhile, if the RSI is high in the sky, like it was over here in October 2021, that's typically a sign that this asset's overvalued, or potentially it's not a good time to be investing into the real estate sector. Let me quickly go through and just mark every time that the RSI was as low as it is currently. All right, so as you can see here, a time prior where the RSI was as low as it is currently would be in March 2020. The RSI came down, it touched the 30, then this entire sectoral ETF ran as much as 105%. That's huge. Again, this is an ETF. It's not just one company. This represents an entire sector largely focused on, again, real estate prices, right? Prior to that, January 2018, we had a dip and the RSI came down nearing that 30 and then proceeded to run as much as 40%. Prior to that, also in 2018, you could potentially consider this all one run. I'm kind of breaking it into two. But again, in February 2018, RSI came down, neared that 30. As you can see, more often than not, it gets close to the 30. It doesn't exactly touch the 30 in this particular product. That's fine. We're just recognizing this. And again, I'm using the weekly time frame. Right up here next to the symbol, you will see a W. That means every candle here represents 1 week of time. So again, February 2018, RSI came down, neared that 30, and then proceeded to run as much as 14%. Prior to that, in November 2016, RSI came down, neared that 30, ran as much as 16.28%. And then all the way back here, as far back as TradingView will give me information for. Can you guys see that? Yep. Right here in February 2016, this particular ETF, again, the RSI came down, it neared that 30, then proceeded to run as much as 27.69%. Now, it's important to keep an idea on where these sectoral ETFs are going moving forward, because they can act as a good indicator for where their underlyings are going to be going. When an ETF moves a little, its underlyings can move a lot. What else do I like about symbol XLRE? Well, if we come over here, you can see this particular electronically traded product currently offers a 3.64% dividend, which is really good. That's really good. Well above that U.S. national average, hovering in that 1 to 2%. Again, real estate companies and REITs tend to offer very good dividends. Now, maybe on a more fundamental side, why is it that I see value in the real estate market? Well, as you can see quite clearly, ever since January 2022, there's been a heavy decline in real estate values, right? So there's been this heavy depreciation. This particular electronically traded product has come down as much as 34%. Now, what are some of the factors that would have led to a large pullback in a real estate focused ETF like this? Well, over this time period, we've had rising interest rates. We went from a period up here where interest rates were super low, like damn near close to zero, right? But the Federal Reserve has been consistently increasing rates throughout this time period right here. They've been increasing rates. Now, increasing rates for real estate is particularly bad because, again, this represents a wide variety of real estate focused companies. So what I'm about to say isn't subject to all of them, but it could be subject to some of them. When it comes to real estate mortgages, you have what's known as potentially a fixed rate mortgage or a floating rate mortgage. So if someone's looking to make new investments into real estate, whether it be for a personal, whether you're buying a house, or whether it be you're, again, a real estate investor who's trying to maybe get into commercial real estate, you need to take out a mortgage, right? So the higher interest rates got, the more expensive that mortgage is going to be every month, and it's going to cut into your potential profits on your real estate investment, because you're now having to pay more interest on this relatively large size loan, right? To gain control over these properties. So that cuts into your profit margins a little bit. On the other side of that, you probably have companies that have floating rate mortgages, which means the rates that they're getting charged on their mortgages changes in tandem with the rates environment. And as we just stated, throughout this 2022 period, we had rising interest rates. So if you had a floating rate mortgage that you signed at, I don't know, I'm just going to say a random number, 2%, 3%, and all of a sudden interest rates are rising and rising, your floating rate mortgage is now charging you maybe 3%, 4%, 5%, and this is more than you anticipated. Again, cutting into the potential ROI, a return on investment, you might expect to receive when you're, again, buying these properties. But now, again, now that we summarized all of 2022, right? Again, the rising interest rate climate caused this pullback. We are now at a near peaking interest rate climate. We are at a high. We are at the interest rate resistance. What is it, 5%? Give me a sec. If you guys are a member of our Discord, you will be able to come to these channels, and right on the side we have economic data, and click in here, and these get updated regularly and automatically. And this is our current rate environment. So 5.5%, just under 6%, depending. So these are relatively high rates. And if you've been keeping up with the news and what the Federal Reserve is indicating, they're indicating markets are starting to factor in a potential pause on rate increases, which would indicate that we are nearing the top of this interest rate cycle. We are nearing the top of this rising interest rate cycle, which would mean we need to start allocating money into sectors that will benefit in a decreasing interest rate environment. Again, I'm going to say it again. You want to start allocating money into investments that are going to benefit during a decreasing interest rate environment. Why? Because all of 2022, we've been experiencing increases in interest rates, which is making the cost of money more expensive, which is, again, which was a direct cause for this electronically traded product that represents real estate companies in the United States to pull back as much as it did. But now that interest rates are peaking, every indication that we have to look at is telling us that we are near the top of this interest rate cycle. Whether interest rates peaked a month ago or whether they peak 3 months from now or 4 months from now, it doesn't matter. Like, we're within spitting distance of a peak in this interest rate environment. And we need to start allocating funds to products that are going to benefit during a decreasing interest rate environment. And real estate is one that will directly benefit during a decreasing interest rate environment, because your mortgages, if you have a floating rate mortgage and you're paying, I don't know, again, random number, 4%, 5%, 6%, if those rates start to come down, your floating rate mortgage, you will notice that instantly in your payments, because you'll instantly start paying 2, 3, 4%. So that's going to increase your ROI as a home investor if you're an individual, or if you're a commercial investor who's buying apartments, right? This is going to increase your ROI and bolster their financial reports. These are all good things. So that's more of the fundamental side as to why I particularly see value in a symbol such as XLRE. And you're probably very familiar with the XL series of sectoral ETFs, right? Whether it be the XLY, XLK, XLF, these represent sectors of the US economy. I feel like maybe real estate gets overlooked a little bit more than some of the other ones like technology and finance. But as you can see, just looking at our typical technical indicators that we look at for every investment we make on this channel, including the RSI, good dividends, price channels, this one is at a support and quite clearly ready to bounce, and it's definitely going to be one of the sectors that benefits from a peak in rates and entering into a declining rate environment. I think that's everything I have to say about XLRE. We're going to move into some more real estate based companies real soon, so make sure to stay tuned.